Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very beautiful weekend, a great New Year's holiday period with your friends and family, and that you're ready to get locked in for 2026. So in today's markets, guys, the S&P and the Qs responding very well. Most of the market was pushing higher. And of course, we have a lot of things to talk about in today's video, especially after the big news over the course of the weekend. Of course, the Venezuela situation, but there were many more pieces of tech news that came out today, which did help lift the markets a little bit all throughout the session. As a result, very nice broad market performance. So in today's video, guys, we're going to do a few things together. Number one, we're going to go over some key pieces of news, obviously from the weekend, and the implications for various different segments of the market, namely the oil market, which everybody is talking about right now as a result of the Venezuela situation. Thereafter, we will cover a bit of our technical analysis rundown in terms of where are we right now in terms of rotations into 2026, the SPY, the Qs, and all of our minor sectors as well. Once we're done the index analysis, we will dive into our big tech names and do it all again. Take a look at these big tech names and derive which of these names are well positioned into 2026, either for some swing trades or still for some long-term positions, because we know a lot of these tech names, guys, haven't really done much over the course of the past 3 months. So we'll have a look at what we can do with them into 2026. Towards the end of the video, we will go over our infamous biggest gainers and losers of the day list, of which, of course, there were many names to the downside, but of course, many high-flying, high-beta names pushing higher and higher today. So we'll go over a few of these names, as we have done in the past 2-3 weeks. You guys probably know my stance on a lot of these things, but we will just recap what are the expectations on some of them into 2026 and how we can best position in the event that you're interested. And at the end of the video, I will give you a quick little glimpse into the portfolio to let you guys know what I have on the table for this week, but also which plays I'm carrying in to the rest of 2026 in terms of longer term trades and especially some of those leap call options. So that being said, a lot to cover in today's video. Let's jump right into it, shall we? So the S&P up about 0.67, the Qs up 0.79, and overall, very nice broad market day of rotation. Although we were missing a few key big tech names such as Apple, Microsoft, and NVIDIA, the rest of the tech landscape was not too bad. Financials having an incredible day of performance, everything from the banks to the credit card companies to some of the financial data markets as well, performing very well. Healthcare was a bit of a mixed bag. Medical devices and diagnostics were performing well, but some of the larger pharmaceutical players unfortunately coming down. We know that healthcare has been a very hot sector over the course of the past 2 months, but recently we've been consolidating, especially some of the biggest winners of the past 2 months, such as Eli Lilly and AbbVie. Well, they've been consolidating a very healthy pullback, in my opinion. Consumer defensives still remain quite soft, although we did have a nice gain on Costco here, about 2.5%, as they reported very strong December sales. Industrials and the bottom half of the market still a little bit mixed, but overall, far more names advancing than declining, and some really nice big green days on a lot of this stuff out there. Moving on further to the one-day relative, you can see that even better to where most of the market was actually pushing higher, led by materials, financials, cyclicals, industrials, and shout out to energy as well. And to the downside, healthcare, consumer defensives, and utilities pulling back a little bit. On the 1 week relative performance, we still stand well at a net negative for the Santa Claus rally. If you take a look at the last week of trading, the last 5 days of trading roughly, you will quickly see that we are net negative on the S&P, despite being very close to the all-time highs. We have some sectors that outperformed recently, such as energy, industrials, and financials, but for the most part, everything still remains slightly muted. Even with today's nice gains in technology, the sector still remains a little bit soft in certain segments, and we're going to talk about that in today's video as well. So before we get into more technical analysis, guys, let us do a very quick rundown of some of the news elements, of course, that we had either today or over the course of the weekend. So, of course, we're not going to talk about exactly what happened Friday evening into Saturday morning. Of course, you guys know that the United States had a military operation into Venezuela during which they removed sitting president Mr. Maduro from office over the course of the night and brought him back to the United States to stand trial for multiple allegations. Now, that being said, the impacts were definitely felt across several different segments of various markets today. Take a look at this. Number one, the Venezuela stock market, the Caracas Stock Exchange, was up 17% on the day after that piece of news or after that news event transpired over the course of the weekend. Now, I'm pretty sure that not many of you are invested in the Venezuelan stock exchange. However, very notable for us to see that, right? And what you might have expected today to be a bit of a down day in the markets because of possible political uncertainty surrounding what is China going to do in response, what is Russia going to do in response. As a matter of fact, today actually turned into somewhat of a risk-on day for many segments of the market. But one key piece of data that we have to kind of analyze together in terms of how the most recent piece of news could impact some of our trades. Well, you guys know that I've been talking about the energy sector for a better part of the last 3-4 weeks, saying that this one could be a very interesting play for several different reasons. Number one, because of renewables and their desirability in terms of the data center power requirements, everything from, well, let's say solar, but also battery packs, but also nuclear, but also a whole portion of oil and LNG in terms of natural gas. So the energy sector was always poised to start into 2026 after multiple years of consolidation, probably have a nice leg of expansion just because of the sheer amount of demand that the data centers are requiring over the course of this year and into 2027 as a lot of the construction on these data centers gets finalized, right? However, this piece of news from Venezuela obviously kickstarted this ETF to the upside, and you had many names today up massively, right? Names that are directly associated with possible operations or newly established operations in Venezuela moving forward. Names like Chevron, right? In terms of their direct possible drilling in Venezuela in the future, although this will take a very long time, but also because Venezuela, their oil is mostly heavy oil, right? It needs to be refined and refined a lot. And some of the refining companies, such as Valero, they had a beautiful day up today, 9%. Then you also had SLB, right, which was up substantially today as well, about 9%. And a few other key refining names were up today. However, despite the recent uptick in some of these oil names, is it a good proposition to be investing in oil on the sole premise of what could possibly come out of Venezuela's ground in terms of further oil production? Well, the short answer, guys, is probably not, because it's going to take a lot of money and a lot of time. Here's some analysis put together by The Economist today, and a few bullet point summaries are the following, right? So Rystad Energy, a consultant firm, estimates that $110 billion in capital expenditure on exploration and production alone would be required to bring the country's output back to where it was 15 years ago. So across social media and in the media today, you're obviously hearing a lot about Venezuela's oil reserves and the possible barrel outputs that they can have, but nobody talks about the sheer amount of time that it's going to take to set in motion those operations if they are indeed to be put in place. It is going to take years and years and years. Obviously, the market will respond to news events right away, but if you are investing in these oil companies, just understand that before they touch a drop of oil and before that results in free cash flow and possible expansion of profit margins for some of the refineries, it's going to take a very long time. So hopefully you acknowledge that if you are buying these for that specific reason. Moving on further, tens of thousands of skilled workers from engineers to geologists have left the country already, and the state of the oil giant is now largely run by the armed forces. Now, of course, the premise is that there are going to be boots on the ground, right? American engineers possibly coming into there, oil contractors, etc., and the know-how of several large corporations such as Chevron. But all of this takes a lot of time to establish, and billions of dollars of investment, of course, right? And the fact that the market's already saturated under the break-even price for most existing Venezuelan fields with decent reserves, which raises the question, of course, will companies actually want to go into Venezuela and spend this money if they know that all they're going to do is contribute to more oversupply, right? So keep that in mind when you're thinking of the energy trade in terms of the Venezuela aspect of that trade. I'm still very bullish on energy for this year, but because of factors that will be limited to this year and next year, more specifically, the energy requirements from the data centers, right? The Venezuela oil X factor kicker is possibly a catalyst to keep on the back burner over the course of the next 2, 3, 4, 5 years, of course. But any trades taken in terms of energies specifically this year, I do believe the focus should be more specifically on the direct power requirements of the data centers being built now. Those will translate more into revenues, free cash flows, and margin expansions in the near to short term, but I totally understand if you guys want to trade some of these different oil companies because of this Venezuela news, as we may get a few more volatile days. A lot of these oil companies, of course, only ever move, 0.5%, 1% per day. But with this piece of news, you might be able to see some extra volatility, and some of you guys that day trade the markets might be interested in that. So that's all we're going to talk about in terms of Venezuela. We're not going to get into the geopolitics of this. How does China feel? Are they possibly going to invade Taiwan because of what happened? How does Russia feel? Are they just not going to pull out from Ukraine because of what happened? I will let you guys drive those opinions. All we focus on the channel here is how to actually extract some money from the markets from these pieces of news. So I figured I should talk about the energy trades right now. Moving on further to more news, obviously NVIDIA right now is having their CES conference in Las Vegas. Well, it's not theirs, it's just the conference, and they're presenting at the conference. And there are a few key, very interesting elements that came out of there so far. As a matter of fact, right now, Jensen, I believe, is still speaking. I listened to it for about an hour and a half before starting filming this video. A few key elements that stood out to me right here is we have an open source, end-to-end autonomous driving stack. Yes, NVIDIA, we know that they've had their NVIDIA Drive platform, but they're going one step further, an end-to-end autonomous driving stack called AAPL. Very solid. Lucid, JLR, and Uber also back the effort as well. They are possibly going to, well, they are partnered with somebody. I mean, you can tell from the image who their partner is going to be. They didn't disclose it yet, but Jensen was literally presenting with the picture of a Mercedes in the background. So you will assume that NVIDIA is saying it's targeting a robo-taxi launch, their own robo-taxis, with a partner as soon as 2027 using level 4 autonomous vehicles in limited predefined areas. You would assume that the possible partner of choice is Mercedes. This is not brand new news to anybody. NVIDIA, every time they talk about their autonomous vehicle partnerships or any drive system, benefits, right? They've been referencing Mercedes for the last 5-6 quarters. So it seems to be quite obvious that it could be them, but maybe it's somebody else. But I mean, you might assume that it's probably going to be Mercedes. That being said, more news out of this event. Vera Rubin, their next generation card, yes, after Blackwell, is in full production. The compute tray has no cables, hoses, or fans, and also has ridiculous, absolutely ridiculous numbers, man. 5 times Blackwell in terms of inference, 3.5 times Blackwell in terms of training, way more memory bandwidth as well. The NVLink, obviously, too, very important, 2 times and 1.6 times the amount of transistors. Very strong numbers put out by NVIDIA. And keeping that in mind, NVIDIA also today raised their January quarter sales guidance too by about $3 billion above the expectations, all the way up to $65 billion. So NVIDIA with a lot of news today, but the stock didn't really move. I do believe that NVIDIA is pending a pretty large breakout when it does happen, but it's nice to see that they're just stacking the positive news one on top of the other back to back. Moving on to other pieces of the market right now, Microsoft making their own acquisitions today. They just announced that they agreed to acquire Osmos to accelerate autonomous data engineering in Fabric. Now, this is going to be very good, guys, for their build-outs of agentic AI. So AI agents, essentially, pretty much to simplify very complex workflows overall. So nice to see that Microsoft is making their own progress with agentic AI. We haven't seen many news outputs by them in terms of agentic AI, but it seems as though they need the help of a company called Osmos to do that, spending about $2 billion or so to acquire this company. So very attractive right here in terms of that acquisition for Microsoft. Moving on a little bit further here, you got some news out of the Department of Energy. You can see right here, the Department of Energy awarding $2.7 billion to restore American uranium enrichment. Once again, guys, I think that energy is going to be a very big trade this year, whether it's nuclear, whether it's renewables, whether it's LNG in terms of natural gas for these data centers, in combinations with the turbines, through somebody like Bloom Energy's technology in terms of making that swap, that energy conversion, right? So very interesting plays in the energy landscaping all throughout this year. I do believe there's something for everybody. And even a company like Vistra came out after the close today, acquiring for about $4 billion, acquiring a company called Cogentix, and pretty much acquiring all of their output capacity as well in terms of energy output capacity. You might remember I've been talking about Vistra on this channel for a very long time now, the past few months, saying it might be an interesting look here as they do have exposure to all of the keywords, right? Natural gas, nuclear, solar, and battery storage it is a very nice player into this year, but there are, of course, many more, and we'll be bringing you guys some updates on that all throughout the early portion of this year as I just give you guys my ideas on a lot of these stocks, right? Moving on further here, Zeta, retail fan favorite, announced a partnership with OpenAI at CES. This is after the close. Power Athena, its AI marketing agent for enterprises. Now, this was very strong. There were some rumors about this prior to the CES event. Zeta was already up 9% on the day and now up an additional 8% in the after hours. Nice to see after retail has been talking about this stock for a very long time with good reason. I mean, it only trades at about 3.5 times forward price to sales, which is very strong. You're now seeing it trying to make an attempt at the good old massive inverse head and shoulders and the good old monthly uptrend breakout. So nice to see them finally starting to do that. Congratulations to all Zeta shareholders out there. You guys must be very happy if you accumulated some shares at these lower prices. Moving on a bit further here, a couple more for you guys. Amazon expanding their Alexa Plus beyond devices with a new Alexa.com website that lets some users chat with the assistant in a browser. Shout out to ChatGPT, right? Now, Amazon doing their own agent models, of course. Still early access on a wait list. Amazon is also rolling out a framed art style TV, similar to the frame style category. Those pieces of news combined led Amazon stock to be up almost 3% today. And they desperately need it, right? You need to get these breakouts going on Amazon beyond this infamous area of resistance of 240. That was a nice piece of news there as well. And that is pretty much it for your overall pieces of news today. So hopefully you guys enjoyed those. I know I spent some time on these tech news releases, but it's very important to do so, especially when I know that a lot of the audience obviously is invested heavily in these companies. You kind of want to stay up to date with everything, right? That being said, now let's move into some charts, shall we? We're going to start off with the good old S&P. But while we're doing the S&P, I'm going to start to include, obviously, what we have to look out for the week, right? So in terms of this week, you guys know that the more volatile days this week are going to be Wednesday and Friday for the key reasons that you do have some jobs reports coming out. Wednesday, you get the ADP private employment change, and you also get the JOLTS jobs openings report. Additionally, on Friday, you get the non-farm payrolls and the unemployment rate. That being said, we know that the jobs market is going to be front and center on everybody's attention into 2026. So these jobs reports really matter. If you're going to see any big volatile days in the market this week, in my opinion, it will be Wednesday and Friday. So please keep that in mind, as we know that the jobs market is a narrative that everybody's paying close attention to. The media, retail traders, analysts, and the Federal Reserve at the same time. So pay attention to these over the course of this week. In terms of earnings, we don't really have too much on the table this week, guys. The next week is going to be the biggest week. Well, not the biggest, but the start of the big earnings weeks. Next week, we get all the bank earnings. But for this week, there's a few companies out there, but no companies that will truly move the markets in a big fashion. The markets are currently sitting at about the neutral stage right now, as we are not super extended above our 125-day moving average that this gauge uses for the analysis. Stock price strength, 52-week highs and lows on the New York Stock Exchange. Well, we are better than we previously were, into October, late October, early November, but still neutral standpoint right there. Stock price breadth, I mean, we're getting better, but still in a fear environment, and put and call options ratio is still somewhat elevated in relation to extreme greed levels when nobody's buying put options, right? And the market volatility remains neutral. As a result, some indicators are neutral, some are more oriented toward fear, so you still are standing at a bit of a neutral basis right now. If we take a look at the market breadth today, though, it's been recovering nicely, especially on these short-term time frames, right? So percentage of stocks above their 20-day EMAs, looking good. We're back above 50%. We know that we had a nice expansion here from the lows of October and November, back up to 75%. And then you had a bit of a pullback here over the course of the past 2 weeks. Now, we were saying on the channel that this isn't too much of a big deal. Why? Well, because although stocks were pulling back in the short term, right, in terms of towards their short-term EMAs, they never lost the long-term EMAs, which is what the institutions look at, such as this one right here. The percentage of stocks above their 50-day EMAs, still relatively strong, holding that 50% mark, which is what the institutions want to see. So these all-time highs, late October into early November, we were saying that these all-time highs previously were very poor all-time highs because it was a very concentrated market, not that much market breadth at all. And we were talking that the most recent all-time highs were much better all-time highs. Despite being the same price, you had far more market breadth, which allows you to make the determination that your bias should be bullish in terms of breaking through them. So percentage of stocks above their 50, still looking good here, and percentage of stocks above the 200-day EMA, still at a very cool high 50s, right? 59%. We didn't lose too much in the past 2 weeks of consolidation. So essentially, right, all that happened is you had a nice expansion of breadth on all your timeframes there, and then the markets just kind of flattened out and didn't really do too much in the past week. So some stocks, right, a lot of stocks just pulled back to their short-term EMAs, but none of them actually broke their longer-term EMAs, which means that the bulls remain in full control still in terms of market breadth. So all that looking quite good. Now, in terms of where do we stand for 2026? So a little bit of an introduction before we get more into the indexes, but I figured I should include this into the indexes, right? Well, in terms of inflation moving forward, not a problem, right? Under 2% on the Truflation Index, looking very strong there. I will remind you in terms of the S&P, where did we finish off last year? Well, we had another very beautiful year, right? The S&P was up roughly 16%. And what you'll notice here from this chart in terms of the annual returns, you'll notice that although the long-term expansion rate of the S&P is roughly 10% per year, you never actually get many single-digit return years, such as like the infamous 8 to 10% average. No, as a matter of fact, you can see here that the years between 0 and 10% are not that many. There are far more years that are more than 10% to the downside or more than 10% to the upside. So in all reality, although the long-term average is indeed 10%, it's actually not that you don't get actual 8 to 10% returns that frequently. It either overshoots or it undershoots in a very big fashion. So keep that in mind. But another very good year for the S&P 500 last year. Moving on further here, keep in mind this is a midterm year as well. So your seasonality is slightly different. The black line is your average seasonality and the blue line is the midterm election seasonality. You can see it's a lot more choppy. Now, both usually end the year strong, but you can see otherwise where you traditionally get a somewhat smooth start to the year until the summer months, which become slow, and the fall, which becomes very choppy and a bit more volatile with a downside skew. Well, this one tends to be choppy all throughout the year, right? And we know that this year we do have the catalyst to have a very choppy market. We still have some concerns in terms of affordability and the K-shaped economy, and we also still have some concerns surrounding the jobs market right now, and also certain characteristics of the AI trade that remain a little bit unclear, right? Is the CapEx cycle going to be as strong this year as last year? What about the construction timelines of the data centers? Are they still in place or will they be delayed? Whole bunch of questions surrounding AI that are still somewhat confusing and could make the market a little bit more choppy than it perhaps was last year. Additionally, you do have the midterm election cycle as well, so please keep that in mind. This is data from 1970 through 2021. Moving on a little bit further here, your expectations for the year across the board are a roughly average of 75.55 in terms of a price target for the S&P. That would put us about 8-9% higher than where we are right now. But if you keep in mind, right, you don't know when you're going to get that. Are we going to have a very good start to the year, then chop, and then end of year rally? Or is it just going to be down the first half of the year and then end of year rally? Or are we going to have a very poor first start to half of the year and then end of year rally? You don't know, right? All you know is that it's probably going to be more choppy than years past, as we have a lot of conflicting narratives still. I'm still bullish. I'm just saying this year might be a bit more choppy than we have been used to in the past few years, which were years of, let's be honest, right? Other than this tariff decline right there, it's been a pretty stable uptrend since the lows of 2022, right? Very stable uptrend on the monthly. Would you be surprised if you get a bit more chop this year into the fourth year of the bull market expansion phase since those 2022 lows? No, you wouldn't be. So just tighten up your trading a little bit if you can. That is my humble recommendation. Now, moving on a little bit further, in terms of this year, we are expected to have good earnings. EPS is expected to remain strong. We are getting 15% expansion. That data is measured by FactSet. I always bring this one up. FactSet is saying that calendar year 2026, you should have an estimated average of 15% earnings growth across S&P 500 constituents, which is almost 2 times better than the 10-year average, which is about 8.6. So keep that in mind as well. This market will largely be driven by expansion of earnings and expansions of profits as well. Here are your profit margins expected to move higher into calendar year 2026. We also know that increasingly profits have been driving returns in this bull market. There was 2025 overall that was measured at the midpoint of the month of December. And an additional metric for you, that's not the one. I think I actually lost the chart. Well, that's kind of unfortunate. Did I lose the chart? I think I lost the chart, guys. I'll bring it up tomorrow, but essentially there was another chart depicting the fact that, you know, a lot of the gains this year will probably be in a question of EPS and profit expansion, not so much multiple expansion, which is good because we know that a lot of the valuations of the market right now remain stretched. So you really want to see profits and earnings driving the market this year. We also know that we're going to have a lot of fiscal stimulus into early 2026 with several tax cuts and obviously several deregulation policies, which could favor institutions and consumers alike. And here's your projections from Goldman Sachs as to when all this is going to most impact the markets overall. It should be Q1 into Q2 as well, where you see the net benefits of those. So keep all of that in mind, guys. I'm just here to say that I am still very bullish on 2026 as a year, but like I was saying, it may be a bit more choppy than just a very consistent, beautiful uptrend of expansion. Obviously, you have the tariff situation right there, of course, right? But this year might just be a little bit more choppy for all of the reasons that we previously described, but I still remain net long, and I still remained overall with a bullish leaning bias. That being said, let's get into the S&P. So talking about the S&P, I mean, there's not much to report here. The bulls are still trying to reestablish this daily uptrend after having lost it right there. You got a nice engulfing move. You set the higher lows, and now you're looking for the expansion leg into the early portion of January. Decent, right? But the line in the sand now remains the level of last Friday. The lows right here, 680. If you flush 680, daily downtrend, and you will just tighten up this weekly pattern. This looks very good. It does indeed look like a nice bull flag. Right in the 12 EMA, riding support below us, and you are looking for that infamous leg of expansion. We will see if the bulls can give it to us, but definitely you've been very soft here in terms of momentum, in terms of MACD, so the bulls do have it, unless you get hit with a negative catalyst such as jobs, which brings you down. If jobs comes in good, you might expect the markets to just blast off towards that 700 mark. You're currently still battling with the infamous all-time high resistance range that we really haven't been able to break through, right? This whole 690 area has been challenging, and it's been that way over the course of the past quarter. So overall, we're looking good on the daily. The weekly timeframes look quite adequate as well. And monthly, well, the monthly's just been consolidating kind of sideways in a bull flag formation as well. So pay attention to it, guys. As I said, just be very tight on your trading this year overall, especially if you're trading the wheel strategy. Just go for high quality companies and wait for the market to come to you. No sense in chasing anything over the course of this year because it might just be a little bit choppy. At least that's my opinion, and that's what I'll be doing. My long-term portfolio, still fully allocated, still holding long and strong. I still have a bunch of lead call contracts, but for any new trades, I'll be very discreet in what I choose to position in. Moving into the QQQs right now. So the Qs, I mean, the Qs has just been a byproduct of big tech doing a whole lot of nothing for the past 3 months, right? Other than maybe nice pushes from Apple and nice pushes from Google, the rest of tech and maybe Tesla as well, a lot of the big tech names just haven't done anything, right? Semiconductors have been somewhat of a mixed bag. We're missing some of our bigger performers like Broadcom coming down after their earnings, NVIDIA not doing anything, AMD not doing much of anything either. And across the board, right, you have many tech names that are just not doing anything, right? Amazon hasn't done anything for a while. Meta hasn't done anything for a while. Microsoft hasn't done anything. Netflix hasn't done anything. NVIDIA hasn't done anything. So many names, and even Palantir, which is a $400 billion company, right? They really haven't done anything since the month of August either. There's been some ups, some downs, but we can't necessarily say that we're cleanly uptrending like we were previously, right? So keep that all in mind when you're looking at the Qs and wondering why it's just not going anywhere, right? You need some of your big performers to come alive. Now, what we're going for right now is the bulls are trying their best to, well, right now, this is pretty much just a tightening range, right? If you look at it like this, especially you see it better on the weekly time frame right there. Tightening range, looks like a bull flag, seems like a bull flag, so maybe it is indeed a bull flag. Line in the sand, though, remains at 610. Support also 613 on a 605. So the bulls have a decent amount of support. And what we're looking to do right here, we're looking to expand, right? Now, keep in mind, if you do flush these lows, sadly, going into the weekly downtrend, you are going to tighten up this range a little bit further. You don't want to see a bad jobs report. That could cause a little bit of an unwind and a bit more early monthly consolidation. But who's in control here of the longer term time frames, right? It's the bulls. So any declines here early January, I do still think are buying opportunities even into earnings. Earnings projections are supposed to be very bullish for the year, but especially for Q1, Q4 reporting in the end of January, of course. And a lot of the big tech companies have provided very strong guidance. So if we get some slight declines here into the end of the month of January, they will indeed be buying opportunities, just looking for a monthly higher low, right? My bias right now is for the bullish breakout, but if it doesn't happen, don't be too disappointed. Just understand what's going on here on the higher time frames and how we can best position to benefit from those declines, which will just be kind of a retest of the 12 EMAs. Usually when the Qs come down to the 12s in the context of a bull market, it does tend to be a nice buying area. Moving into financials right now, financials really breaking out hard today, 2.18% to the upside, but we had that bias because the bulls never lost the daily uptrend, right? They tried to crack it here with the lows of Friday, couldn't get it done. And we know that there's been a expansion within financials as to before it was only the banks expanding, right? You had JP Morgan on a nice expansion leg right there. The investment banks such as Goldman Sachs, Morgan Stanley, nice expansion. Even some of the other banks, Bank of America, continued uptrend and expansion phase. Wells Fargo, nice expansion phase. Citigroup, nice expansion phase. Charles Schwab, nice expansion phase. And on and on and on. But what we didn't have for a while was a lot of other big players such as Visa and MasterCard. They've been coming alive over the course of the past month or so, looking great. And today was a huge day, huge engulfing candle from them of the last 2 days of trading. MasterCard as well, they tried, couldn't get as much lift as Visa, but not looking too bad. MasterCard's still in a big accumulation range right now, but I'm very bullish on this name, guys. Look at the monthly, coiling up. Very, very, very tight, nice sideways accumulation on better and better and better and better earnings. You should have a bullish leaning bias into this one as well. And even other companies such as SPGI and Moody's Corporation coming alive. Look at these moves today on SPGI, 4%, right? Nice bull leg of expansion, higher lows, and trying to crack through the tops. Look at Moody's. We were literally just talking about Moody's not too long ago being a very nice buying opportunity down there as they were having better and better earnings and just looking for the monthly uptrend sweep. And now we're finally getting it. Moody's very close to the all-time highs, right? So looking great here. You got several segments of financials which are expanding right now. And even pay attention to insurance, man. This is the insurance ETF, IAK. We know that Berkshire hasn't really done too much over the course of the past, let's call it the past year. Just sideways movement right there. Some of your bigger insurance providers as well, like PGR, haven't done too much of anything. If anything, they've been just net to the downside, right? But if you don't know which company to pick, maybe you might be willing to play the insurance ETF as a whole, right? Usually when you end up with sideways consolidation like this into a bullish overall financials landscape, pay attention. The bias would definitely be long to the upside after a nice 2 years here, 23 and 24. You spent all of 2025 consolidating while having pretty good earnings. So you might just get a breakout in insurance as well, which is why I say financials is going to be a very interesting aspect of the market into 2026 because of the rate cuts, possibly because of the recovery of the bottom half of the K of the economy, which is your lower income demographic or middle class, as well as they recapture buying power as the inflation rates continue to plummet down while wage growth still remains above the inflationary trend. Obviously, that takes some time, but just to say that financials have a lot of very nice tailwinds into this year. So pay attention. There are many aspects to this financials trades. You don't only have to play the banks. Moving on to healthcare right now. Healthcare, not the best day for healthcare, but several large players like Eli Lilly and AbbVie were down. I mean, can you really blame them, right? They kind of carried over the course of the past 2 months, very strong pushes over the course of the end of the month of November into December, and now just a bit of consolidation. So healthcare remains a bit flat. The daily is kind of all over the place, right? Very, very tight price action right here. Higher lows are there, 153. You lose that, sure, it's a daily downtrend, but just look at the weekly, you're going into some form of a tightening range, right? Bull flag, in other words, especially when you're consolidating in the top 30% of a move like this. Usually the bias does remain long. And in terms of the monthly chart, looks very good here, guys. Monthly downtrend, nice engulfing move, looking for some potential higher lows. Didn't really backtest the 12 or the support range below us, but still looking nice into 2026. Healthcare should be a favorable sector into this year as well. Moving on to SMH. So semiconductors up 1.15%. They were up a lot more early this morning. Look at these awkward moves. We'll cover them later, but I mean, look at AMD, right? AMD started off with a great early morning candle, and then literally from the open just went down. Same thing on NVIDIA, same thing on Broadcom, and so many other names. Very awkward price action right out of the gate in terms of some of these semiconductors, but the index overall was able to maintain green. You had some very nice performance from ASML right here. You might remember all of last year, well, when we could, I was saying end of 2024 and 2025, ASML was like free money down here. It really was. Now up here, not so much. Now I'm just holding, I'm not adding anything more, but this one was such a fantastic play. And of course, you have some complementary names like Micron, of course, which just continues to push the highs. But look at Micron as well, right? Huge open and then just declined all throughout the day. So possibly some early year shenanigans in terms of rotations and repositioning and things like that. A lot of semiconductors have ran really hard, but other semiconductors have not ran really hard. So maybe if you're looking for some of the plays that have been lagging behind, there's a few of them, right? Like Qualcomm hasn't done much, Texas Instruments hasn't done much, but if you want to stay focused on the retail fan favorites, NVIDIA, AMD haven't really done much recently, right? And even Broadcom, right? Super strong player. I mean, they've just been consolidating ever since their earnings. So there are many opportunities still left on the table for semiconductors, depending where you look. That being said, not looking too bad all the way up here. Daily uptrend breakout, clear as day. Your line in the sand level is down here at about 359. Any pullbacks, looking for the higher lows for some possible further expansion. And the weekly timeframes, you got it. You got the weekly uptrend breakout. This was always looking like a bit of a tightening range consolidation into a bull flag, right? So that being said, looking very good. Higher lows on the monthly are now set. Next leg of expansion underway. But keep in mind, you are somewhat overbought on the ETF. So I'm not personally playing the ETF. I'm kind of picking and choosing my individual names. See, some sectors I'm picking and choosing individual names, like semiconductors. Other sectors, like if I wanted to play insurance, I probably wouldn't pick and choose my companies. I'd probably go with the ETF. Energy, same concept. Instead of picking and choosing my names, I'll probably go with the ETF, right? So it just depends. That's just my personal preference for certain sectors, but obviously you guys are feel free to do whatever you prefer the most. Moving on to IWM Russell right now. So the Russell daily downtrend. Right now the bulls are trying to make some form of an engulfing move to recapture the uptrend. We're currently mounting above this resistance range, which was 251, then about 247. Not too bad of a day. See, the Russell is something else that I'm not really playing the Russell personally, but I am playing individual small cap names. That being said, looking good, man. This is a cup and handle, right? Looking very good. Engulfing move, higher lows, directly in the 12, never closing below previous resistance, which is now support, and now maybe looking for the expansion phase. So if you wanted to play the Russell into 2026, you definitely have a lot of tailwinds for growth names possibly, which we always highlight on this S&P chart, right? Comparing and contrasting the current bearish narratives versus the longer-term bullish tailwinds. And most of these longer-term bullish tailwinds do indeed support the expansion of the small cap trade this year. But as I said, I'm playing names individually as opposed to playing the entire index. But of course, you should feel free to do whichever you prefer. That being said, moving on to a few other sectors, and then we're kind of done. We'll go into other assets really quickly. Consumer staples remains very, very soft, right? We're looking for the inverse, possibly head and shoulders. The one thing you should keep in mind, though, is that we're just into previous resistance, multi-year resistance, 2022, 2023, now 2024 and 2025. It's just been doing a whole lot of nothing, right? So this sector as well could have the macro tailwinds, of course, which we've been talking about, could breathe some life into XLP. And XLP, if I were looking to play staples specifically, once again, would I be targeting individual companies? Well, you guys know which staples I prefer. I'm a big Costco fan. I enjoy Walmart as well, but I don't position in everything. So if I were looking to take consumer staples, would I be looking into names like maybe like Clorox or Colgate-Palmolive, or perhaps like a Procter & Gamble or things like that, or maybe like a Pepsi or things like that that have been down? No. Would I possibly play the entire ETF? Yes, I'd probably play the entire ETF. Moving on to consumer retail right now, XRT. XRT not doing too bad. Obviously, the Christmas sales holiday period was pretty bullish in terms of data released by Visa, MasterCard, and other things of that nature. Nice engulfing move, looking for the higher lows, looking for the expansion. The key time frame here is the monthly, guys, right? The reason I don't like XLC, which is your, XLY, which is your consumer discretionary, is because most of XLY is just Amazon and Tesla. So it doesn't really give you a good representation of the broad aspect of consumer retail. XRT is a bit more balanced, which is why I'm showing this one. So you could be looking for nice consumer expansion here. Of course, this is predicated on, these projections by the Fed being accurate in terms of good GDP growth, low unemployment rate, lower inflation rates progressively, and obviously the impacts of potential fiscal stimulus policies on corporations and for individuals alike. So, and interest rates obviously coming down too. So this is the no landing / soft landing / no recession scenario, right? This trade is only going to materialize in a very big way if consumers start spending adequately again. So once again, is this a sector where I'm looking to kind of pick my favorite names like a Chipotle or a Celsius Holdings or a Nike or a Lululemon for possible recovery stories? No. Would I possibly play the entire ETF? Yes. And would I possibly play some of the largest winners so far, like names that haven't really, well, names that don't need a recovery story, such as the travel sector, like Booking.com, or perhaps an Airbnb, or perhaps Expedia on a pullback, even though I'm probably not going to get this one right. Yes, but would I break that down into individual parts? Say these are large travel operators. But would I go specifically into the airlines like AAL or UAL or Delta and chase these at the highs, or the cruise ships, right? RCL or CCL? No. So certain segments of the market, I'm staying very broad. I don't want to pick individual names up, right? And consumer retail is one of those as well. I'm not saying that some of these plays like a Chipotle or Cava or Dutch Bros or, Texas Roadhouse or the other sit-down restaurants or quick service restaurants, I'm not saying they're not good, right? It's just that for individual plays, for me, this year, I'm going for certainty. So a lot of my individual plays are still AI and tech focused, as I do believe that they have the best narratives. A lot of these other plays, especially retail trade plays, hinge on the recovery of a few different things, right? Like same store sales. You still have to understand whether or not these companies have pricing power, right? A lot of consumers, you're not too sure if they're going to go back to their previous consumption habits. Maybe their consumption habits have changed. We know that eating at home has been a big trend, right? Cooking food at home instead of going out. So I don't know, like maybe Chipotle has bottomed, but will we see it in their fundamentals? Maybe the stock price will recover, but will same store sales growth improve to where we can expect to have a 2x on Chipotle over the next 6 to 12 months? I don't know, right? And when it's somewhat cloudy like that, I'm not positioning, right? I'd rather position for the broad trades. Another way of playing the broad trades for consumer volume will be playing like the Visas, the MasterCards, or the Affirms of the world, because they encompass everything, right? You can buy now, pay later on almost everything. You can swipe your Visa, you can swipe your MasterCard across everything. So if we're looking for broad volume, I'd rather play XRT, or I just rather play this year some of the payment networks because they encompass the entire consumer retail trade altogether. So these are just a few ideas that I'm throwing out there. You may agree with them, you may not, but this is how I'm trading the markets, right? I'm not going to go through this every single video, but I figured today, as it's the first video of 2026, I should let you guys know if I am playing certain sectors and how I want to play certain sectors if I do choose to play them. Moving on to utilities, the favorite utilities plays this year will probably be data center focus, so keep that in mind. We talked about Vistra earlier during this video, still one of my favorite plays. You can talk about the Duke Energies of the world, right? You can talk about the energy transfers of the world for oil and gas pipelines and other things of that nature, although that's probably an XLE and not XLU, but anything focused for data centers, for renewables, and for the grid. So keep that in mind. XLU, I mean, we've been coming down here, but overall, it's just looking for a bit of a monthly higher low into the 12 EMA. Today, down a little bit, but still, utilities should be a fairly decent sector into this year. A couple tailwinds. Number one, the data center specific companies for electricity towards the grid. So this would be a sector that I would be playing on an individual name basis, targeting the ones with the most exposure towards data centers overall. So please keep that in mind. Real estate, this is obviously XLRE. So it is a REIT heavy real estate ETF. That being said, we're into support right now, 41 down to 39. This one, would I be playing this ETF as a whole? Probably not, but would I be playing some individual segments of it, such as maybe the home builders for a potential recovery of the housing market? Now, keep in mind, the housing market recovery is not going to happen instantaneously like this, kind of like the Venezuelan oil trade in certain respects, right? It's a slow moving recovery story. So home builders, not bad into late 2026, early 2027, wouldn't mind. Same thing for some of the mortgage companies. I wouldn't mind positioning in these further into deep 2026 and early 2027, but we should not be expecting tremendous gains on a super fast basis, although Rocket Mortgage has been, true to its name, moving kind of like a rocket ship recently, right? keep in mind, it is a, $60 billion company. So if you're looking to like 2x this market cap, I know the share price looks cheap at 20 bucks per share, but keep in mind, it is a $60 billion company after all, right? So most of these plays could come alive later in the year. I'm not necessarily playing REITs, although I do have Vici in my long-term portfolio and have been having a lot of fun accumulating it at some of the lower levels. REITs may not be the biggest winners this year, right? It may still be the initial phase of mortgage companies and home builders potentially getting into the initial phases of the residential housing market picking up much before the commercial aspect of the whole thing in terms of REITs. And now lastly, energy. I mean, we talked about energy to start off the video today, but just to recap, obviously, right? I am very bullish on energy because of the data center exposure. If you're asking me, whether I play this one individually or as an ETF, I'd probably play it as an ETF, but I kind of gave it away when we covered energies, when we covered utilities, right? If I'm looking to play certain energy components, would I be looking to play the large players like CVX or possibly ExxonMobil? Well, yes and no. Like there's an argument to be made for them, but there's also an argument to be made for midstream pipelines, right? In terms of companies perhaps like Enbridge or other companies of that nature that have maybe direct connections to the data center basins, or where all the, where most of the data centers are localized, either in Virginia or in Texas or in various portions across the United States, right? So midstream pipelines could be interesting, but you guys know there's a lot of pipeline names. So in the event that you are not a midstream pipeline specialist and you don't want to do the work, I have no problem. As a matter of fact, myself and the Discord members have been talking about positioning into XLE leap call contracts just to play everything, right? Because there's so many different components in XLE. There's renewables, right? There's various other portions. Obviously, we can talk about the various nuclear energy plays like Constellation or possibly like the CCJs of this world for uranium extraction, things of that nature, right? So there's so many different components to the energy markets, but this one at least is kind of something that encompasses most of everything. So I would be keen on playing this one as an ETF, but I also wouldn't mind breaking it down into certain individual components, whether those are certain individual natural gas components for data centers, or certain, nuclear components for that aspect of the market, or certain renewables components. As you guys know, my renewables play is a small cap play, which is TE Energy, vertically integrated United States manufacturer, kind of going around China, because, this is a solar play essentially, right? So solar, nuclear, natural gas, 3 segments that you should be paying attention to into 2026. You can either play them individually or you can play them together as a group. XLE, obviously there's many more energy ETFs, but I'm just kind of contrasting what we can do instead of playing things individually. If you feel more comfortable going under the context of an ETF, especially when utilizing call options, leap call options with 2 years of expirations, sometimes people feel more comfortable under the banner of an overall ETF. So keep that in mind. On to the VIX right now. The VIX not doing too much of anything, so we're not really going to talk about it. There are a few volatility catalysts this week. Obviously, jobs, private jobs, in terms of the Wednesday release, right? In terms of jobs openings and the ADP. And then Friday, you get the non-farm payroll. So I wouldn't expect the VIX to do too much tomorrow, but Wednesday, if the jobs report comes in negative, you might see an upswing in volatility, and the same thing for Friday. So just keep those 2 days in mind. But as of right now, the VIX is very low. As a result, positioning for leap call contracts in things that you believe will have favorable narratives, favorable tailwinds into the next year, year and a half, 2 years, right? The reason I'm putting so much time on my call options, all of my call options, guys, are June 2027 or December 2027. Why? Well, because of this, right? Because of this, and we know that it may be a bit more choppy, and there are some conflicting narratives. Affordability with the K-shaped economy, the jobs market still, it's a little bit more iffy, right? The picture is not as clear as perhaps 2024 or 2025, even when the AI trade was in full boom swing. Now there's a couple little elements that you got to be a bit more cautious with, right? So keep that in mind when looking at the VIX. Moving on to our metals trades right here. So gold, very decent day on the Monday session, guys. Gold was up 2.7%, looking very strong here on gold. Really, there's nothing much to report overall, right? Just a consistent daily uptrend. I mean, the bulls are looking very strong right here, right? Higher lows, equal lows right now. And now we're not too sure, because this was obviously a big sell-off day when the COMEX increased margin requirements not only on gold, but on silver, on palladium, on platinum. All of the metals, of course, took a big bath. And now we're just kind of consolidating a little bit. Nice move by the bulls. We'll see if they actually have it in them to, mount above the all-time highs, or if we just have to consolidate a little bit more, kind of like we did all the way down here. Just consolidate awkwardly for a while, right? I'd be open to either or scenario. Right now, the bulls are in full control in terms of the weekly time frame. Weekly higher lows appear to be set if they do want to go for this daily uptrend continuation right now. Not looking too bad, but positioning up here, I mean, unless you have a long-term thesis on gold, the risk to reward is kind of awkward buying it here for a short-term swing trade, right? Where's your upside? Well, the upside is the previous all-time highs, and the downside is here. Unless you really speculate and you see, well, I want my upside to be 5,000 and I'll put a stop loss right there. I mean, you could do that if you want to, right? It's not the way I trade for short-term swing trades and things of that nature. Gold is still quite extended, but this one would be a hold for me. If we have positions from all the way back here, there doesn't appear to be much reason to sell right now. Moving on to silver. So silver forming a nice base of support after those increased margin requirements were put in place, which saw silver have one of its worst days in recent memory in years and years and years. Appears to be a base of support forming at $70. So of course that becomes your line in the sand level. It's important because if you lose that, obviously daily downtrend, first of its kind in a very long time since November. And overall, you'd be looking for very healthy and natural weekly consolidation after these very overbought conditions on the weekly and very overbought conditions on the monthly, guys. I mean, the RSI on the monthly is 90, right? And the last time that happened was all the way back here in 1980. It's been a long time since we've had RSI this high. Now, keep in mind, you can always trade this one with a trailing stop. The trailing stop would definitely go under the $70 level right now. Positioning up here is very greedy, in my opinion. We've been talking about this one over the course of the past 2 weeks. It's a very greedy net new long trade. I'm not saying it can't work. I'm just saying if we are taking this trade, please, if you can, try to trade with a stop loss, because if you unwind this daily uptrend, right? I mean, the weekly can take you all the way down to the mid to low 60s before forming a new base, kind of like we did back here, come back, touch the 12. I mean, it wouldn't be so awkward, right? How many times has silver done this over the past 12 months? A lot. Has it just come down and tested the 12, right? So this time should be no different. I know everybody always says, well, this time is different. Well, I mean, when you're very extended from all the moving averages, right? You got to be a little bit more careful. I'm not saying it can't work. I'm just saying, like, are you early or are you late? Well, you're not super, super late, but you're not early either. It's kind of in that like very precarious middle ground to where you know very well that if you're buying this one right now, you are chasing the price. So let's be honest, right? It doesn't mean that it can't work, and a lot of momentum traders enjoy this style of trading. It just means that you're not early, and as a result, you should be managing the risk accordingly. But congratulations to everybody who's been in gold and silver. You guys must be up a lot on your positions. And now lastly, before we cover our big tech names, we're going to get into our Bitcoin and Ethereum trades right now. So Bitcoin, very nice expansion here over the course of the weekend, right? Risk on move after the Venezuela news. So finally, we were talking about this tightening up range down here. And we were saying when Bitcoin and crypto gets this tight, it's going to break, and it's going to break hard one direction or the other. And we were saying it's probably going to break in the direction of the overall asset markets. The overall asset markets have been relatively bullish here over the past few days in terms of risk on sentiment, right? Especially since Friday. A lot of these names that were up today are also having pretty big days during the Friday session. So there's been a repivot back to risk on, and Bitcoin and Ethereum have been following. So nice expansion here, daily uptrend set back in motion by the bulls. And now we're looking for the weekly 95,000. Give me a break and close this week. Needs to break and close above 95. That happens, weekly uptrend, and that gives you an end to your monthly consolidation, and we might just be looking for a re-expansion trade, at least back up to the 100 to 107,000 level on Bitcoin. I mean, in terms of long-term positions, I'm still pretty bullish on Bitcoin in the long term. Same thing I was saying back here, right? I was just saying accumulate for the long term if you wanted to, because the short-term price action wasn't so conducive to any short-term swing trades unless you were trading with a stop loss below the lows and a take profit all the way up there. So keep that in mind. And moving on to Ethereum, Ethereum was kind of the same concept, right? The bulls were trying to go for a daily uptrend break, and we were saying if we are trading that one short-term, stop loss is down below there. Take profit is at your resistance range up here at about the $3,600, $3,700 range. Daily uptrend looking nice. Weekly, need a bit of motion to get this one back. 34.20. Lower highs, right? Weekly downtrend, weekly lower high, higher low. Now I need the higher high if you want to set this weekly uptrend in motion. It'll be a big one. First one since August. And that'll put an end to your monthly leg of selling down. And you'll be looking for the good old recapture here of Ethereum back towards 4,000 to about 3,700, this resistance range. Nice. I mean, we were just always looking for a monthly higher low. It got very volatile, very choppy, and very bearish there for a moment in terms of sentiment, right? But we've always been looking for a higher low, and I've maintained that stance on the channel literally for the past 3-4 months. And we were saying if you're bullish in terms of the Ethereum thesis for the medium to long term, in terms of the back end of the banks, the expansion of the stablecoin networks, et cetera, et cetera, et cetera, the Tom Lee thesis, right? Well, you would be a dip buyer of these looking for possible re-expansion into 2026, 2027 as that fundamental thesis comes into play one part at a time. But at the end of the day, guys, it's crypto. It's always going to be violent, right? It's always going to be manipulated in terms of these wild liquidation events on the 10th of October, cascading into all this selling and algorithms manipulating the price every single 10 a.m. on the dot almost, right? You guys remember that. We were talking about it all throughout the Christmas period break. So keep that in mind for crypto. Not looking too bad. Nice to see them expand a little bit today. That is everything for your overall market outlook, guys. And I figured, I should spend a bit more time on the sectors into 2026 because a lot of you have asked me, what are my thoughts on 2026? So we talked about it, right? And the moral of the story remains, I'm still very bullish on tech, and they're some of my largest positions. But I'm also exploring other niches of the market, some of which have been left behind for a while, such as staples, such as retail, such as certain segments of utility for data centers, certain segments of energy for data centers as well, certain aspects of the financial segment that haven't performed as well as the banks in the past 3, 6, 9 months type of stuff, right? I am still overall bullish on tech, but I'm also exploring other aspects of the market, diversifying my bets a little bit. As you guys know, that I was very heavily concentrated into tech and AI 24 into 2025, because that's what was working, right? But now after years of consolidation and finally inflation dead and finally rates meaningfully coming down and with good projections into 2026, I'm exploring the re-expansion trades for several consumer aspects of the market, right? But also the second order of plays for data centers. Not so much the build-outs, although I do have positions in some of the build-outs, right? Talking about the Iris Energies of the world, the NBISs of the world, but I'm also targeting the second order plays, such as pure play software, and robotics, names like Kraken, right? Names like T Energy, small cap plays like that. Names like UiPath for software and robotics process automations, RPA, right? So I'm exploring the second order plays. Although I still have a lot of hyperscaler plays and data center builder plays, I'm exploring second level plays for AI right now. And I do believe those can be some really interesting ones because there's a lot of very interesting ones, guys. As a matter of fact, between the $1 and $10 billion range, very interesting plays, anything across energy, software, and other things of that nature, robotics especially as well, right? So keep all that in mind when exploring the markets for this year. That's everything for your index rundown. Spend a little bit more time. Let's get into big tech. Then let's cover our biggest gainers and losers. So we're going to cover these a little bit quickly because not much has changed. Apple down about 1.38% today. So Apple, the price action has been a somewhat consistent daily downtrend over the course of the past 2 months. And we are slightly challenging the bottom end of support right now at about 266. Now, Apple's looking great for a bit of a retest trade, but at a lower level. If Apple comes down here prior to earnings, you will probably see me play this one, right? Weekly level is being challenged right now, 265. You lose that, you lose the weekly uptrend, and it would just look something like Microsoft, right? You guys remember when Microsoft started doing this as well? Losing the weekly uptrends into monthly consolidation into its 12 EMA. Well, this is the trade I've been talking about on Apple, and it might just be coming soon, right? So we'll keep an eye on it. I'm not saying it's going to manifest, right? We could just bounce from here, but loss of the 50 EMA, we haven't lost the 50 EMA in a very long time in terms of the daily. The weekly challenging our weekly higher lows. If you lose that, you lose a lot of short-term momentum in the stock, and it could just be heading a little bit further into monthly consolidation. I know you can't see the monthly candles too well in this chart. Let me just make them a little bit bigger here. But what I'll be targeting is essentially a backtest here of 257 down about the 240 range. If I can find this little pocket for a swing trade on Apple, that is where I would be interested in positioning. I've been saying that for the past 3 months. I've been waiting for it, right? You guys know I love these 12 EMA backtest trades. We've been talking about it on Amazon this entire time. We were talking about it on Meta this entire time, right? We were just patiently waiting for the 12 EMA backtest for leaps or further swing trades. We're talking about it on Microsoft, waiting for the infamous 12 EMA backtest. We talked about it on Netflix. Netflix overshot. We're actually getting a 26. NVIDIA, we were talking about it, right? Waiting to get close to the 12 EMA for positioning. And that's where I launched my positions. So now I present to you Apple. So just pay attention to it. Fundamentals look good. Q4 should be a pretty good quarter for Apple. We know they've had great iPhone sales across China and across the rest of the world, but the valuation at 270 is just a little bit extended. So when it's a bit extended, I need to get my technical pullbacks into solid 12 EMAs, solid previous resistance, which will be solid current support. Moving on to AMD right now. AMD, part of the batch of semiconductor stocks that had a beautiful open, just gave it back all day. Now, Lisa Su is speaking right now, I believe, right? So I don't know what the headlines are. I mean, maybe I can look at them for you in real time. I don't want to make this video super long, but let's just go check out this guy right here. So see, there's Jensen with his picture of the Mercedes, right? So I wonder what company they're going to partner with. I don't know. But here, maybe this guy's pretty good, right? Do we have any AMD news? I'm not going to spend too much time on this. No news from him just yet. So maybe he's having dinner or something like that. I don't know. I'll get you guys the AMD news tomorrow, but Lisa Su is speaking at the CES conference right now, as a matter of fact. That being said, daily uptrend, line in the sand remains put at 209.22. Nice daily uptrend recapture. Looking for a new higher low, possibly for further trend continuation. AMD has done not much in the past 2 months of trade, but they are going for the weekly uptrend. Nice little break above. We'll see if they can maintain. Nice weekly uptrend here on AMD, guys. And AMD has been a very easy trade to be building a position into if you have a long-term fundamental thesis. The stock in around 200, especially several times when it's come down into there, has been a fairly easy trade, right? It's trading under a 1 peg, mid-7 price to earnings, and the fundamental thesis for AMD still remains quite strong. I mean, look at this fundamental expansion for the company into 2026, 27, and beyond, right? Huge EPS growth, huge revenue growth. We'll get to hear from them, from their earnings towards the beginning of the month of February overall. One thing's for sure, AMD remains an accumulation trade for shares, potentially down here, but also every time we start backtesting some of these low 200s, I'm selling puts down here 190 to 175. Key zone for me to just farm some premium. Moving on to Amazon right now. Amazon, nice day. We covered their news today, 3% to the upside, reversing Friday's candle, but still trapped in resistance. 240 down to 230, let's call it. The bulls are trying something here, daily downtrend, nice leg of expansion, higher low set with the lows of Friday, and going for the possible daily uptrend. Need to challenge 240 though, and really break above this big old area of resistance that's been plaguing this stock for a very long time at this current stage. However, that being said, we've been trapped between resistance and support for a while now. It looks good, right? Tightening up the weekly like this, going for a breakout. However, if we break down again, I'll just keep doing what I have been doing on Amazon for the last like 3-4 months. Every time we move towards the lower 220s, I'm selling put options 220 and lower, down close to the support area, which is just under 220, about 217 and about 205 down there. So not looking too bad, right? Just looking for a monthly breakout pattern. It's been consolidating for a long time, holding the lows. Might just be looking for a very bullish expansion into 2026. Everybody's super bullish on Amazon, but Amazon stock just hasn't been moving. But it's very nice accumulation right now. So hopefully in 2026, I'm very bullish on the company in 2026. Hopefully Amazon has its year in the sun and we actually get the accumulation into a nice distribution phase. I don't know, but counting on it. Moving on to Google right now. So Google, not too bad of a day, 0.63% to the upside, right? I mean, Google is very stretched right now. You'd be hard pressed to say that there's good risk to reward up here. Google just remains a hold for me for long-term shares. I mean, they're trying to go for the daily uptrend continuation here. They're trying to go for the weekly uptrend continuation as well. But would anybody be surprised if Google just doesn't really do much into their earnings, which is slated to be released at the end of the month or early February? Probably not, right? We're still extended on the weekly timeframes right now. You're still very extended on the monthly timeframes as well. I mean, it looks like they want to hold the price, but any pullbacks would be very healthy pullbacks on Google, in my opinion. I'm not playing Google up here. I just don't think there's good enough risk to reward to warrant any call options or things of that nature. But if you guys want to take a stab at it, go for it. Not my style of trading. I need more of a technical pullback overall. That being said, is Google expensive up here at 320? Well, it's not cheap. I wouldn't say it's super expensive, but it's just not cheap anymore, right? Close to a 2 peg, close to a 30 multiple, which is the higher end of where Google usually trades. That being said, super, super solid fundamentals, and Google is working on a lot of very nice things into these next 2 years. Moving on to Meta right now, Meta up 1.29%. Not the worst day for Meta, but still just stuck here, stuck between where 640 down about 630 area of support below and above resistance 680 up to about 705. I don't know if Meta has it in them to break out much before their earnings slated to be released early February. That being said, it's still a nice area of accumulation, right? The bulls are keeping it very tight. This looks like a bull flag, right? They look like they want to break for it. In my opinion, it's going to move in the direction of the overall markets. If the overall markets are bullish, Meta will probably start to challenge this area above, but there doesn't seem to be any alpha on this Meta trade to lift it rapidly, right? No big news releases from Meta recently, other than their most recent acquisition last week. Meta, though, is a nice accumulation trade at these levels in around 630 to where we are right now. Valuation is fair, in my opinion, low 20s multiple and a 1.63 peg. So this one remains a long-term shares trade or possibly a long duration leap call contract trade as well. Moving on to Microsoft right now. Microsoft down on the day. That being said, Microsoft hasn't done anything in the past, like 3 months more? Right? More than that at this point in time. Resistance stays above 501 down to 489, and the support level is not anywhere close. It will not too far away. 453 down about 430. So keep that in mind. We're just embarking into this infamous monthly consolidation phase. Nice test of the 12 EMA. I'm selling put options below here about the 460 range, right? To get my break even down. I'm selling them with some time. So to get my break even down into the 450 range, not too bad. Microsoft as well is a long-term play for me. Long-term shares or farming some put credits or possibly leap call contracts. Not too bad now that Microsoft has pulled back and hasn't really done much over the better part of the last 4, 5, 6, 7 months at this point in time. Valuation remains still quite manageable at 470. Moving on to Netflix, another company that hasn't really done anything other than go down since the Warner Brothers Discovery battle started with Paramount, right? That being said, they tried to push a little bit today, but not getting much done. Daily oversold conditions still, weekly very low on the RSI. The last time that that's happened, this low on the RSI, other than the 2022 bear market disaster, right, has usually been local lows for Netflix, right? In or around the weekly bottoming out process. But of course, there will be some cloudiness surrounding this deal. I still think it's a very nice opportunity for Netflix, though. Around 90 bucks, under a 30 price to earnings. It's a 27, 28, 1.4 peg, decent free cash flow yield, and very nice forward expansion. Beautiful earnings and great guidance into 2030 by the business overall. So I am buying this dip on Netflix with a combination of leaps and just long-term shares, but in the short term, it may still be a little bit choppy. Moving on to NVIDIA right now. NVIDIA having their CS conference right now. We presented a few of the key highlights here. NVIDIA as well hasn't really done anything, right? In the past 6 months. I mean, there were some highs, there were some lows, but overall, we're basically just kind of flat. That being said, the bulls are trying to do something here, trying to go for the daily uptrend breakout above resistance right now, 185 to 178. So you might recall, as I was showing yesterday in the top 5 options video, I had the 180 short puts. I closed those for a profit and reopened some other ones, which I'll show you at the end of the video right there. But decent, right? Playing off of this NVIDIA mid 170s area to low 170s, selling some premium down here, not the worst proposition. It's the bottom end of monthly support and the 12 EMA. And NVIDIA, I mean, despite the fact that they haven't moved, they've improved their earnings a lot, and they've improved their guidance a lot. In around 175, low 20s multiple, a 1 peg, looking quite good. I am very bullish on NVIDIA. Weekly uptrend is still in motion right now, although very slow. It's not classic NVIDIA getting these big legs of expansion, right? I mean, it's a big player right now, $4.5 trillion market cap. So it's not as easy to move as something that's a $20 billion market cap, right? I am very bullish on NVIDIA into 2025, and I do have a combination of either shares or leap options to, ride this one into the mid 200s throughout the year. On to Tesla. So Tesla, 3.10% to the upside, but we know that the bears are in slight control of this one. Into support, 460 down to about 440. Not too bad, right? The bulls had their expansion phase, big retracement right now. And essentially, if the daily doesn't make sense, just take a look at the weekly, guys. When in doubt, zoom out. Weekly, just looking for, this was a weekly downtrend, engulfing move, looking to reset, right? Weekly, looking for a higher low, policy for expansion. If you fall one more level, you're coming right down there. 430 down about 416. Obviously, Tesla deliveries recently have been quite soft, but the premise of the robo-taxi developments this year and the robotics with Optimus and things of that nature keep Tesla shareholders' sentiment very high right now, and also help to kind of keep the stock price as high as it's been, because people are focused on the long-term positives instead of focusing on the short-term negatives of the pure form car business. So we will be covering Tesla earnings when they have them at the end of the month of January. No plays for me on Tesla right now. I'm just kind of holding the shares that I bought way back in the day, not adding any more up here, and not also playing any call options or anything of that nature. Moving on to our few last ones here. So Palantir up 3.68%. Not too bad of a day, right? Not too bad of a day, but Friday was a big sell-off day for a lot of SaaS companies out there. And sadly, in the process, Palantir lost the daily uptrend. So we're right now back in the gulag. If the daily doesn't make sense to you, the weekly might just make a bit more sense, but we're still trapped in this big old gulag, right? So that being said, they had the weekly uptrend, lost it, nice engulfing, or nice 80% retracement size. You need the new higher lows and reset the weekly uptrend, right? I'm not too sure if Palantir has it in them to break new all-time highs before their earnings mid-February, but we will keep this one in mind. Obviously, Palantir was a component of the United States' success in terms of their military operation into Venezuela. Not commenting on how you should feel about that operation. I'm just saying that Palantir's technology was quite evidently used in terms of the coordination amongst different military outfits that were used in that operation overall. So obviously, Palantir has a lot of military contracts, very high-grade military software with the highest amount of security clearance that you can obtain from the US government. So that's possibly why Palantir had a bit of a recovery story today. Palantir remains the same for me, right? I'm not adding any shares up here. I'm not doing any call options or things of that nature. I'm just holding shares that I've held in the past. Valuation remains stretched, and this one should only be started as a new position if you have a 5+ year time horizon, because although they had some of the best earnings that the market has ever seen last quarter, right? The valuation still remains excessively high, and unless you have a very long-term time horizon, it's tough to justify buying this one in the short term overall. So keep that in mind. Fantastic company, love the company still, but the risk to reward up here, is it the best in the market? Probably not. Moving on to SOFI right now. SOFI, beautiful day of expansion, testing resistance again, 30 down to about $28. Daily uptrend back in motion. SOFI had a nice slide, giving us some great opportunities to sell some put options down into this area to farm some credits. And all of those credits should now be in your pocket. And perhaps as well, you were able to acquire some shares, because we were saying in this range, it was a nice area to accumulate some shares. The valuation was fair, around $27, a 1.1 peg and a mid-7 price to sales. Into resistance right now, and the bulls are seeking to establish the new weekly uptrend. That would be a breaking close above $30, right? Highs, lows, going for the higher highs. We'll see if they can get it done over the course of this week. I am very bullish on SOFI into 2026. I think I've been very clear about that recently as to where this was just a accumulation range, just very average monthly consolidation after a huge 3-4x expansion move. Consolidation into clear support, previous resistance, current support, and now you just might be looking for the expansion phase. So congratulations to everybody who has participated in SOFI so far. Moving on to Uber right now. Uber down 2.56% today because, of course, they got a couple downgrades because of the threat of autonomous vehicles overall. Now, if you're an Uber shareholder, you probably don't have much to worry about in terms of competition from AVs, at least over the next 3, 4, 5 years. Like, this is a down the road issue. Obviously, Uber does so many trips, man. They did 3.5 billion trips last quarter. A lot of mobility and, of course, a lot of deliveries as well. But you guys know that sentiment is a very powerful thing in the market sometimes, to where even if a company is trading cheap and bringing in tremendous amounts of free cash flow, great amount of buybacks, great amount of free cash flow yield, all those things combined sometimes doesn't remove the negative sentiment from a stock right now. However, if we're looking to acquire some Uber down here, not the worst proposition, right? If you don't believe that the autonomous vehicle thesis will, Uber's obviously participating. They have so many partnerships with various autonomous vehicle providers, from Waymo to Pony AI, partnerships all across the world with different players, right? End of the day, previous resistance, current support, decent valuation. I'm playing some short puts down here and possibly just nibbling some shares, right? Most of my Uber share buys, guys, were like back here. I've been in since for the past the IPO period through 2024. Last time I did some Uber share buys was here. Haven't really bought anything up here. I wouldn't mind buying anything up here. I still think the company is slightly cheap, but I'm kind of fully allocated to Uber right now. So no further big trades from me. As of right now, I'm just farming some short puts. Am I doing any leaps or anything of that nature? No, because a lot of my capital is invested in leaps in other places. Would it be an okay candidate with some good risk to reward? Yeah, but you know that you have some sentiment that's against you right now. Last but not least, moving into Taiwan Semi. So TSM, same thing, man. You know, big open and then just sold off all throughout the day, going for the gap fill from the Friday session, right? But TSM, brand new all-time high today, 330, huge print, right? We know that we were stuck below resistance for a while. That resistance is 310 out of 302. Now, this is going to be your current support. So maybe you're looking for the breakout retest and possibly run on TSM. Looking very strong right there. The weekly, also a brand new weekly uptrend after being soft for weeks and weeks and weeks since October. Nice weekly uptrend right now. So any back test could be a location if you are the type of trader that goes for these breakout, retest, and run trades. Well, you guys know potentially where to look at right now. 310. Right now, TSM, well, it's at 323 right now, so we have to redo the valuation, but, you know, just add, what is that, 275 to 323 right now, so add 17% to this. So if you want to know the valuation right now, just add those numbers to this right here. So let's call it a 22 forward times 1.17, trading at a 25 forward price to earnings, not terrible. And in terms of the PEG ratio as well, right, you just be looking for, you know, let's say a 25 divided by 19, looking at a 1.31, 1.32 peg, not terrible for TSM, but a little bit extended on the higher time frames right here in terms of the monthly, right? I bought all the TSM that I could possibly ever want in prior phases of the market, but if you wanted to nibble up here, I would completely understand. Just understand that the risk reward is no longer super favorable on the company, but beautiful company, fantastic fundamentals, and I'm holding all of my shares. And that's everything for your overall market rundown. Now, let's spend a couple minutes talking about the biggest gainers and losers of the day, and then I'll show you guys the portfolios, and then we're done. So now for the biggest gainers and losers section of the day, we're going to do something different. We're going to play a little game called Is It Late? Because most of the questions that I always get for some of these stocks is it a good time to buy? Is it too late to buy? So let's play Is It Too Late for some of these fan favorite retail names, right? SMR and Oklo, you guys know my stance on these. These are lottery bets at best because most of the revenues will only be coming into 2027, 2028. They usually run with the high beta names, right? In terms of their revenues, they have no revenue. So these are not my favorite plays. I understand why people play them. People play them for the same reason that you would play quantum stocks, right? Because you believe in the future and you want to position early, or just because you're a momentum trader, right? If you're just playing these from momentum alone, well, you do have clearly established stop loss areas below your recent lows for some of these moves, right? And if you're just looking for the next leg of expansion on Oklo or SMR, we'll just trade them as pure momentum plays, but at least understand why you're playing them. Because anybody who's in these for the long term, you guys are gonna have to wait a long time for your revenue. So please keep that in mind. Ondas, is it too late? Well, this begins to be the moment in time where indeed the risk reward becomes somewhat unfavorable. The only thing that's a bit underwhelming with Ondas is the fact that they are now almost a $5 billion company, but they don't really have the revenues to support that. Now, I know a lot of people just don't even think about fundamental analysis when looking at these because they get caught up in retail sentiment and price action, basically momentum, which is fine if that's the type of trader that you are. But keep in mind, right, the 2028 forward revenue projections, even with a lot of their acquisitions they've done recently, they have beautiful products, beautiful physical products, and beautiful software products as well. Keep that in mind, right? Very good company. But once again, the revenues for 2028 are only $355 million. It's trading at like 15 times 2028 sales. Where do we start drawing the line, right? Well, you got to draw the line somewhere. We were saying that Ondas was a great play between $6 to $8. Up here at $12 to $13, the risk to reward is not super favorable anymore. Can there possibly be more momentum carry through? Of course there can be, but just understand if you're buying here, you're not buying in the optimal range where technicals, such as nice pullbacks, line up with fundamentals. Now you're basically just counting on momentum. So are you too late on this one? Likely so, but it can run, right? It's just not my style when things run a bit too far away from their fundamentals. I would rather just focus on other things. If you missed it, you missed it. If you're in, there's no real reason to sell right now. You have a great cost basis, and you're probably already in to your compound annual growth rates already. Company like KTOS, right? Is this one too late? No, this one, as a matter of fact, is not too late. Beautiful weekly uptrend breakout right now. And see, this is an example of a company. It's a $15 billion defense contractor, right? Manufacturing drones and other things of that nature. So $15 billion, keep that in mind, How much are they trading at? Let's compare and contrast this to Ondas, right? So this one, positive EPS, something Ondas doesn't have yet because it's a very small company, right? Now, that being said, this one, in terms of forward 2028, is only trading at 7 forward price to sales, right? That's like half of Ondas's valuation, right? So keep that in mind. They're currently trading at about 10 forward price to sales for 2026. Manageable for a very fast growing company. So is KTOS too late? No. Does it have great momentum? Yes. So keep that in mind, right? Am I positioned on this one? No. Would I mind starting a position on this one here and DCAing through the 12 EMA upon further consolidation? No. I don't have it yet, but I understand why people are in it, and congratulations on your gains. Iris Energy, CIFR, NBIS, this is all the same trade in my opinion. Do whichever ones you feel have the best fit for you overall. You can make a case for every single one of these, of course. Are they too late? In my opinion, no, but every one of these should be treated as a DCA trade because you guys know the deal, right? I have it on the Oracle chart for a reason. You have the big deals, which were brokered in 2025 with the hyperscalers and all these companies. Now is the execution phase, and the execution phase comes with certain themes, right? It comes with possible dilution for shares. It comes with possible further debt capital raises in the forms of bonds or convertible bonds. And it comes with potential certain delays in terms of construction timelines, the infamous execution phase before the data centers are actually in place generating revenue. So through this execution phase, which will last probably the first half of 2026, well, NBIS, Iris Energy, CIFR, and things of that nature can be nice accumulation trades from where they are right now through potential backtests of the 12 EMAs, so keep that in mind. Is it too late? No, not at all. You are in the execution phase of a lot of these trades right now. Moving on to other things, such as Oscar Health. Well, this one you got to be careful of because it's going to be tied up in the whole ACA subsidies, Affordable Care Act, and the possible, maybe Trump is going to do something with Obamacare overall in 2026. We don't know. So the health insurance plays like UNH, Molina Health, all these other companies, are they possibly good bets for a very long-term future? Perhaps. Can it be very bumpy in the short term? Perhaps as well. Affirm is probably one of my favorite plays for consumer discretionary purposes into 2026. Looking great here in terms of the weekly breakout, very daily breakout, and weekly trend breakout as well. Looking very strong, very bullish on this company. Monthly backtest. Are we too late? The answer is probably no. It's currently trading at about $80, roughly 10% or so higher than it currently was. Still a 1.5 peg right now, and roughly a 6 price to sales with fantastic revenue growth, fantastic user growth as well, and very low default rates on this one in comparison to their other competitors, such as perhaps names like Klarna or Sezzle or things like that, which is why I always play Affirm over and above those other competitors. Mercado Libre up 9%. So this one, obviously a byproduct of the Venezuela news, possibly because it's going to open up more end markets, both for the fintech opportunities arm of the business and obviously the e-commerce arm of the business as well. So Mercado Libre and Nubank, anything regional associated with, well, anything in Latin America, right? We're obviously up a lot over the course of the day today. But over and above that, we were saying that these two plays were great opportunities without that Venezuela news to begin with, right? Mercado Libre, especially around that $2,000 mark where we just were, prior to today, right? Essentially, right? Super cheap valuation for this amount of growth. So Mercado Libre, probably still one of my favorite international bets in 2026. This one, not too late. Grab, also one of my favorite plays, not too late. New holdings with their forward projections, arguably not too late. The best point of entry, I will remind you, the last time we were talking about it was like 15, 16, 18 is getting up there, right? Your compound annual growth rate is not as good as it was down here. Late? No. But are you early? No. It's kind of in that in-between location right there. So those are just a lot of the names that I figured I should cover with you guys. I mean, Zeta. Obviously, you guys are going to ask me, is Zeta too late after this move right here? The answer is no. Zeta right now in the after hours is trading at about a $5.6 billion market cap overall. How much sales are they doing? That should be the first question you ask yourself, right? For a fast growing company. Well, as you can see right here, in terms of 2026, $1.7 billion, it means they're trading at about like a 3.3, 3.5 price to sales. That's not too bad at all. And they will be improving on their EPS profile as well, right? Partnership with OpenAI and looking for the monthly uptrend expansion. So if you feel that you looked at it a bunch back here and, oh no, now it's at 24, you can't possibly buy it because you have anchoring bias. I could have bought it back here, so there's no way I can buy it here. Well, look at the fundamentals, right? If the fundamentals still make sense and the technicals show that you're going for a breakout and you're buying this one for the long term with a big old monthly MACD cross, it can still be an attractive proposition. Of course, not as attractive as it was 1718, but I wouldn't necessarily say you are late. So is this one too late? The answer would be no. Robinhood, another interesting stock that I'm sure a lot of people will have questions on. This one has been kind of brought down with the aspect of crypto, which was somewhat unfavorable to them. We covered their earnings last quarter, very strong earnings, of course, for Robinhood, as they always deliver, right? Around 110 was the area that I was very interested. At 123, is it too late? No, but keep in mind, are you going to be getting the same gains as people who bought here or here or here during the tariffs? No, you're probably not, right? That being said, can you still make some money on buys up here? Yes, but try not to assume that you'll be making a 2, 3, 4x as rapidly as people here. No, Robinhood is now a $110 billion company, right? And in terms of the revenue generation, I mean, I know sometimes these companies can run rich, but at a certain point, you got to draw the line, right? It's a $5.6 billion revenue run rate for next year, which puts them at roughly like a 20 times price to sales, right? It's expensive for what it is all the way up here. That being said, can you still make money? Are the fundamentals still great? Are they still expanding into many, many different lines of business? Yes, and we say this every time we cover Robinhood, right? It's just you need to set your expectations. If you're buying this one, you're buying it for the long term, understanding you're not getting the best possible price, and you understand that you may not be looking for the quick 2, 3, 4x type of plays, right? But it should have a very nice 2026 overall. And of course, there's so many other plays, guys, but hopefully we covered a lot of these, right? We covered MCO, covered ASML earlier in the index discussion overall. I told you guys I'm still on T Energy. Is T Energy early or late? Well, it's a $2 billion company. My forward projections for the next 2-3 years are anywhere between $7 to $10 billion. It's a $2 billion company, but look at the revenue profile, right? This is the revenue profile. $2 billion company. It's trading at a 2 forward price to sales. 2027, 2028 should be very big years for them as well. Domestically produced solar panels, and vertically integrated supply chain, and everything from the silicon to the actual panels are produced in-house, which is why I accumulated a fairly big position down here in the $3-4 range. Now, is it late? No. Is it later than I bought it? Yes. If I had to start a position here, it's the first time I've ever seen the company. Would I start it here? Yes, but I would be also open to the aspect of the fact that maybe it might have to consolidate, because this is a very big move now at this point in time, right? It's been very hot. A lot of retail interest, a lot of retail sentiment. So if I'm buying up here, I'm buying under the premise, under the guise of having to DCA my way down and being fine with that, because I'm building a position for the next 1-2 potential years of expansion in the name. So please keep all that stuff in mind when we're talking about all of these stocks, right? Keep in mind forward revenue growth, things of that nature. If you feel like you're left behind, always compare and contrast it against its revenues and how much it makes sense for you in that context. So we'll be covering more of these, as we move on throughout the week. I'll try to cover different ones as we move on, but those are a lot of my thoughts on some of the companies that were high on the highs today. In terms of the ones on the lows, I mean, A-Lab for me could be interesting, play down here 140, but once again, this is very expensive, right? Even at 140, price to sales is a little bit rich, so keep that in mind. 140 is probably the aspect for me. 12 monthly EMA. We talked about it last time it came down there. So A-Lab, possibly a play down there. And across the board right here, I mean, Lyft could be somewhat interesting, but once again, it's going to be a sentiment trade with autonomous vehicles. Lyft for the monthly backtest down here, 17 down to 15. That'll be the next area of interest for me if I were trying to do anything with it, right? And I am building a position in FLNC as well as a battery energy storage play in North America and also across certain aspects of Europe as well. So this one here, down through about 17, 16 on a backtest of this big support level. I'm a big fan of building into there. Same concept, right? $4 billion company, but look at the revenue, right? I'm a big fan of finding these small cap companies that stand to generate a ton of revenue, right? 2026 is a $3.35 billion run rate. The market cap is $4 billion. So I know that my risk to reward in terms of multiple expansion is good. I don't only have to count on momentum. See, on DAS, you can't really count on multiple expansion anymore. It's already doing the multiple expansion. So you can't count on that. I'm a bigger fan of finding other companies that not only can they have retail momentum expansion, aka multiple expansion, but also they can have fundamental expansion as well. I need both of those things. couple that with a nice technical entry, and then you got the trifecta, right? You got the A++ setups. So keep all of that in mind. We'll cover more of these companies as we move through the rest of the week, but that's just a lot of the stuff I wanted to cover. I know you guys just want me to cover the high beta stuff anyways. So that's what we had for today's market rundown. Now I'll spend a bit of time on the portfolio in terms of a quick, brief rundown. So in terms of this YouTube portfolio, we ended the year, I forgot to take a screenshot, but I'll show you guys the charts probably like coming up on the Friday session or something like that. We ended the year up about like 26, 27%, which is okay. I mean, in 2023 on the channel, this account was up like 75%. 2024 was 65%. This one was somewhat underwhelming. I did beat the indexes, but you know, we started off the year with with a lot of damage from the tariffs, right? This account went from like 46,000 starting capital down to like 28, 29,000. And then we rallied back to 60 at the highs of October, then pulled back a little bit into the end of the year as our second batch of leap call contracts kind of retraced on us from the respective highs. Things like Amazon after earnings down from where they were. Things like AMD down from where they were, 250, 260. Things like, you know, our CoreWeave contracts. I'm not making excuses. I'm just saying like, we rallied from like $28,000 at the lows of tariffs because I went all in on margin, taking a big gamble on the tariffs. It didn't work out. We had to reposition a few positions. We were heavily on margin, rallied all the way back with consistent trading to about, you know, $57,000, $58,000 roughly to end the year, which was about a, you know, 27% ROI. I'll show you guys at the end on Friday. I don't have it up here right now. I'll show you guys on Friday. So overall, I mean, we did beat the indexes. Could it have been better? Yes. Right? Could I have not gone full YOLO during tariffs for the margins? Yes. But that's the drawback of using margins sometimes, right? And keep in mind, a lot of this portfolio, since we are small, I'm trying to grow it faster than usual. Sometimes you got to take excess risk to do that. And you guys can clearly see, right? A lot of this portfolio right now is just straight call options, straight debit spreads. We got like $22,000 in call debit spread leaps. And then you got another $10,000 of straight leaps right here. And we also have some smaller cap share positions that we've built a little bit, like a little bit of Path here, some Kraken, some TE Energy, and a little Netflix assignment. I mean, Netflix is part of the wheel, but still, right? So this is the portfolio as it stands leading into 2026. In terms of some trades that we were able to close today, let me just bring you up some trades that we were able to close today because I figured I should bring those up because some of them aren't there anymore. So Uber, we found an Uber trade early this morning, 78 strike. This was on the top 5 options list last night, by the way. 78 strike for Jan 16th, 2 weeks of time. We were in and out of that same day. We closed it later that morning for 33 cents on the bounce. It's good. 70% ROI on the same day for a 2-week contract. So of course I'm going to take that one, right? That was just a quick in and out. Other trades that we closed, we had Affirm. A lot of these trades were from last week. So Affirm, we had this one from December 24th, the Christmas holiday break. This one was a 2-week contract, 85 cents. We closed this one today on the nice Affirm move for 85% ROI. So that one's not on the list anymore. We also closed a SOFI trade, the last batch of SOFIs, 25 strike, January 9th. We took this one December 29th. 22 cents is what we got. We closed it for 5 cents. So that one was pretty good as well. We had an NVIDIA trade that we were carrying from December 29th as well. We got this one back in the day for $1.92. We were able to close this one for, where is it? Very early this morning because I took a couple new trades and I needed the capital, right? We closed this one for 42 cents. Really nice, man. That was like a, 80% win on NVIDIA in not that long at all, just for some natural time decay over the holidays, right? And a nice push. We closed this one very early this morning before the stock pulled back. And you know what? I was able to double dip this trade, and you'll see this one in the portfolio. I took a new trade end of the afternoon when NVIDIA was down 1.3%. We took a new 177.5 strike for same expiry, January the 9th. So you remember I had the 180s. Now I got a better strike price for a decent amount of premium, 0.5% for Friday. So I got a strike price improvement for still 0.5%. So we did NVIDIA again. And I also found a new CP trade, which I brought up as well in the top 5 options list, the 72.5 infamous strike area for about 90 cents leading into January 16th. CP is just very easy support trade, bit of a value name, right? To counterbalance some of the tech, just very logical, a huge monthly support for a very solid company. So there's just a few positions that we kind of just close over the course of the day that you won't see anymore, but a few other positions that we are carrying in terms of the wheel, right? Very easy trades right here. Zeta, we got this one last week for 23 cents. It's currently up about 70%. That will probably be almost worthless tomorrow. FLNC, we got a 16 put also for about 50 cents. This one is about a week and a half ago at this point. January 16th expiry. This one is 80% profitable. I can close it tomorrow if I really wanted to. UiPath, same thing. We got this one last week, 14.5 strike for 23 cents. This is now 50% profitable, right? Trading for about 12 cents. So we can close this one if we really wanted to as well. The NVIDIA put again. Amazon, we've had this one since last week on Friday. 220 put for Jan 16th, a 2-week contract. Got it for $2.20. It's currently up about 68%. So if I wanted to shore up the capital, I can. I've pulled forward a lot of the ROI on this 2-week contract, so I can close this one if I wanted to. Then I have the new CPs and the rubrics. Rubrics we also got last Friday, 2-week contract for about 80 cents. We're underwater on this one, but I'm just playing rubric in this massive area of support down here. They had phenomenal earnings, but unfortunately, the market makers just kind of, cybersecurity, great big manipulation on the price, in my opinion. End of year, shenanigans right there. So 72 is right below us. I wouldn't mind being assigned. It's been resistance and support for a great while. I really enjoyed their earnings. So cybersecurity has been somewhat out of favor the last 2 months. We'll see how long this continues. That's my only assignment risk. And then, of course, we had the Netflix. Netflix, we were assigned about 2 weeks ago at this point at $100 with about $1.68 in credit. So my average cost is $98.32. The problem with Netflix, the reason that you don't see covered calls is because, well, unfortunately, we haven't got close enough to 100 for me to write covered calls. It's just been down here and muted. But also, we haven't been low enough for me to write another DCA short put. So I'm waiting for one or the other. If it moves higher before earnings, I'll write some covered calls up here, try to get out of the position. If we move lower, I have no problem DCAing this trade with another short put order into the 80s. But as of right now, no action. And the rest of the portfolio is stuff that you guys know. None of these are new positions, right? You got the Amazon leaps, which we had for a while, the AMD leap debit spreads as well, which are up 58% right now, the NVIDIA leap debit spreads, which are new from late November, let's just call it, right around the 175 area. They're up about 10%, but also December 2027. Netflix is a position that I started during the decline and added to a couple of weeks ago as well. We're currently down on this one, but once again, December expiry, 114 versus 180 strikes. NBIS, another position I started in November, added to it about 2 weeks ago at this current stage. 140, 200 leap call debit spreads. We're currently just break even on these right now. December 2027. CoreWeave, we've had this one for 4 months at this point. It was up $2,000. Now it's down $500. Same thing, December 2027. 135 versus 280. Notice how much time I have on these trades. FLNC, call debit spreads, 25 versus 37s. This is the trade I started maybe about 2-3 weeks ago at this time as well. These ones are currently up about 50% or so they say. Very good price action right there. Rubric as well. This one is one that we've had for the past 5 months, arguably 4 or 5 months. This one was up at a certain point, 20%. It's now down 13%. We have until January 2027. This is the shortest dated contract I have for all my leaps. Then we have the normal leaps, the Visa, June 2027s, which I started 2-3 months ago. There's been some ups, there's been some downs, but now we're back up roughly 8%. So it hasn't really lifted, but what I'm looking for is Visa's push into 400 over the course of this week. I have until June 2027 to make that push happen. So a lot of time on Visa, very bullish. Bitcoin, I started this Bitcoin position when Bitcoin first dropped below 100K, roughly to the 90s. I DCA'd it about 2 weeks ago near some of the lows, right? And now we're currently still underwater on these. But once again, these are June 2027s, IBIT, UiPath. We started this one before their recent earnings. So about a month ago at this time, Jan 2028, $17 call options that are currently up right now, 17%. But I'll see if I can maybe build a couple more of these call options. I have a ton of shares in other accounts and a ton of calls as well. Nice play that I'm just building into. Sentinel One, we've had this play for 5 months. I recently DCA'd it a little bit, has been doing absolutely nothing. We have until January 2027. We'll see what happens there. Small position though. And then we have Grab. Grab is a position I started about a month ago. Currently, we were up and now we're back to roughly break even or slightly down. This one as well, December 2027. So you can see most of all my leaps, guys, are for deep 2027 because I do expect 2026 maybe a little bit choppy, but you can see I'm still full long. I'm still running the wheel, being very calculated on my wheel positions, closing them when I have the profits. Other than that, just riding the leaps that I've established over the course of the past few months. These are the second batch of leaps. You might remember we had a lot of success in the first half of 2025. leaps like Micron, Google, Apple, Amazon Part 1. This is still Amazon Part 1, but there were other contracts in this mix. Leaps on Uber, leaps on Affirm, leaps on KWeb, leaps on Rocket Mortgage. So we close all of those at like 2x, some of them 3x profits. These are all the second batch of leaps that I've started for the most part recently in the past month and a half, a lot of them since the November sell-offs, right? So keep that in mind. I mean, Amazon and AMD were started before that, but for the most part, a lot of these other plays, they're like the newer batch of leaps. So as a result, they haven't really had the time to run, nor the market environment to run really hard recently. So we're looking pretty good into the first half of the year. So I'll just keep doing what I do, trading the wheel strategy with my disposable trading capital and carrying what I deem to be some of my favorite opportunities in terms of leap call options. Are there more opportunities on the table? Yes, but I'm pretty much full for now, at least in this account. The Discord members know that I have certain things in other accounts, but that's the setup for the YouTube account right now. Some more defensive leap options like on Visa and Amazon and things like, not defensive, but on more casual plays, and then other high growth, high beta names. So that's everything I had for you guys today. Hopefully you enjoyed. If you did, consider dropping a like. Would appreciate it for growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. And last but not least, if you have any questions, please feel free to leave them down below. That's it for me. Take care. See you guys tomorrow after the market close. Have a good week. This is going to be the longest video of the week, I promise, but we had to do a setup for 2026, so keep that in mind. Take care, guys. See you tomorrow. Have a great evening. Peace.